When the Fed is buying assets, it's adding liquidity to these markets, and when they're selling assets, they're taking away liquidity. If you wanted to loosen policy, you could start buying up assets, and that would add liquidity. You're kind of adding lubricant to the market. You're letting activity flow a little bit more freely because you know the Fed is there to be the buyer of last resort. So what the Fed is doing right now is neither of those things. They're letting assets run off. What that means is when treasuries and MBS mature, they're not buying more to replace them and maintain the size of the balance sheet. They're letting it sink, and this is a normalization of the balance sheet. So very normal process, because prior to the pandemic, we were at about a $4 trillion balance sheet with the Fed. After the pandemic, we were over $9 trillion. Now, for reference, before the GFC, we were about $1 trillion, even less than $1 trillion. So this thing has ballooned, so it's part of JPA's administration. The goal is to reduce the size of the balance sheet to what it was pre-GFC. They're not going to get that far in his term, because I think that ends in early 2026 unless he gets renominated.